This is your Swap Hunt Daily News for March 1st, 2026. Bitcoin whale activity is flashing its loudest signal since 2022, and Ethereum just got a roadmap for 1,000 times improvement. Markets are bouncing today after a brutal stretch with broad-based gains across major assets. Sentiment remains deep in extreme fear, though the index has ticked slightly higher over the past week. The total crypto market cap posted modest gains overnight, led by strength in Ethereum and mid-caps recovering from recent lows. The regime is still technically bearish on the 12-hour time frame, meaning this is a relief rally within a downtrend until proven otherwise. Caution is warranted. Large-scale Bitcoin holders have just moved the highest volume of coins into Binance since early 2022. According to analysis by crypto researcher Arab Chain, the whale inflow figure reached a level not seen since that period, arriving as Bitcoin was trading around the $64,000 range before recovering. When large wallets move coins onto exchanges at this scale, it typically signals one of two things: preparation to sell or a reallocation of positions. Historically, similar spikes in exchange inflows from whale wallets have preceded price weakness. The 2021 parallel is instructive. A wave of similar transfers coincided with a prolonged correction. What makes this particularly notable is the timing. Markets are in a bearish regime on the 12-hour time frame, fear is extreme, and ETF outflows have been persistent for weeks. That context tilts the probability towards sell pressure rather than repositioning. Arab Chain was careful to note that exchange inflows alone don't confirm a bearish outcome. Volatility often persists before any directional move resolves. But with whale supply moving toward the order books, traders watching Bitcoin's next directional move are now watching Binance closely. Ethereum has clawed back above $2,000, but the structure underneath the price recovery looks fragile. Crypto analyst Joao Wetson flagged a notable reduction in holdings by Ethereum's largest wallet addresses, those holding between 100,000 and 1 million ETH over the past 90 days. These wallets are typically institutional players or early investors who move slowly and deliberately. When they reduce exposure, it's worth paying attention. The derivatives market tells a similar story. Binance's Ethereum open interest dropped from over 12.6 billion to 4.1 billion. Bybit's notional open interest nearly halved to 1.9 billion. That kind of unwinding reflects widespread deleveraging, traders closing positions, pulling leverage off the table, and reducing directional exposure across the board. The macro backdrop helps explain the behavior. Persistent inflation signals and heightened geopolitical tensions, particularly around US-Iran dynamics, have pushed investors toward risk-off positioning. In that environment, leverage comes off first, and crypto is among the first assets to see it. The question now is whether the current bounce draws fresh capital back into Ethereum derivatives or whether the recovery stalls and the deleveraging trend resumes. Ethereum's long-promised wallet Overhaul is finally moving from theory to timeline. The Hegota upgrade will introduce native smart accounts, a feature that has been in active development for over a decade, and it fundamentally changes how transactions work on the network. At its core, the upgrade implements EIP 8141, which brings full account abstraction to Ethereum natively. That eliminates the need for intermediaries called public broadcasters, which privacy-focused protocols like Railgun have historically depended on. With native account abstraction, those protocols gain direct autonomy over their transaction flows. The upgrade also introduces frame transactions, a new structure that breaks complex actions into sequential frames. Each frame can independently manage authorization, gas payment, and signature verification. Practically, this means users will be able to pay transaction fees in tokens other than ETH, removing one of the biggest UX friction points in the ecosystem without relying on third-party paymasters. Hegota also incorporates quantum resistance features across validator signatures, data storage, user account keys, and zero-knowledge proofs, future-proofing the network against cryptographic threats that are still years out but increasingly worth addressing. The Ethereum Foundation strawmap targets native account abstraction for the second half of 2026. Vitalik Buterin has published a detailed roadmap targeting a 1,000 times increase in Ethereum's transaction capacity. The plan, outlined in what the Ethereum Foundation calls the strawmap, tackles three interconnected bottlenecks: execution, data, and state. On the execution side, the near-term focus is the Glamperdarm upgrade, which introduces block-level access lists. These allow different components of a block to be processed in parallel, increasing throughput without destabilizing the network. Buterin acknowledged that this, combined with improved client software, might be sufficient if network usage stays relatively contained. For broader scalability, the roadmap points to zero-knowledge Ethereum virtual machines, or ZKE VMs, as the long-term execution layer. Instead of every validator rerunning every transaction, ZK-EVMs allow validators to verify cryptographic proofs, dramatically reducing resource requirements and making it viable for smaller node operators to remain competitive. State growth is also addressed directly. Large smart contract deployments currently burden nodes by forcing them to store excessive data. The proposed solution tracks state creation gas independently from transaction gas, applying fair pricing based on actual storage costs. The 1000x ceiling is explicitly a long-term target, with each phase dependent on the stability of the one before it. Tokenized gold markets are now driving 100% of gold's price discovery on weekends, according to new data. When Chicago Mercantile Exchange futures close on Friday, platforms like PaxG and XAUT, two of the largest tokenized gold products, become the only active venues for gold price formation until traditional markets reopen. This is a structural shift worth understanding. For decades, CME gold futures set the global benchmark even outside trading hours. That anchor is now gone on weekends, replaced entirely by blockchain-based alternatives. The implications reach beyond gold. This is one of the clearest examples so far of tokenized real-world assets, not just replicating traditional finance but actively outperforming it in a specific function. 24/7 trading, which crypto markets have always offered, is now delivering a practical advantage that institutional observers can point to with hard data. For traditional financial institutions evaluating tokenization strategies, this weekend price discovery dominance is likely to accelerate interest in blockchain-based asset infrastructure. The question is no longer whether tokenized assets can replicate traditional finance, it's whether they're already replacing certain functions entirely. The U.S. Department of Justice has seized and frozen approximately $580 million worth of cryptocurrency linked to what prosecutors describe as Chinese transnational criminal organizations. The operation was conducted through the District of Columbia's Scam Center Strike Force, led by U.S. Attorney Jeanine Pirro, and unfolded over a 3-month period. This is one of the largest single DOJ crypto seizure operations on record. The scale suggests coordinated activity across multiple wallets and potentially multiple exchanges, requiring significant blockchain forensics work to trace and freeze. For the broader market, large DOJ seizures typically have a limited immediate price impact. The government rarely liquidates assets quickly. But the enforcement signal matters. It reinforces that U.S. regulators and law enforcement view large-scale crypto crime as a priority and have built the infrastructure to pursue it across international boundaries. The operation also highlights the transparency of public blockchains. Despite the decentralized and pseudonymous nature of crypto, on-chain forensics allowed investigators to trace and ultimately freeze these funds. That's the double-edged nature of blockchain transparency. It enables privacy until it enables law enforcement. That's your Swap Hunt Daily News for March 1st. If this kept you informed, subscribe to Swap Hunt HQ here on YouTube and follow Swap Hunt on X for real-time market alerts. See you tomorrow.